And good afternoon, everybody. This is Michael Filigera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott Wave update for the NASDAQ 100 for Tuesday, July 27th, 2021. Well, they came, they saw, basically are doing nothing. We got a little bit of a surprise this morning in that the market kind of came in and the sellers were present. And they're really hanging their hat on the fact that it's more of a reaction to the continued sell-off in Chinese stocks. And that may or may not stick, but nonetheless, this is what happened. So this is what we traded today. And what it has done for me is put the minute 3 here at that top at 34. And thus far, I'm going to continue to look at this as a fourth wave. Now, it's much larger than I would have wanted. And I'm going to put just a quick Fibonacci retracement on this. And then we'll be able to see how much out of line it really is. You could see it could really go all the way down to 618. Most fourth waves don't. This one got close. So, and the no cross zone is right there at 14,644.50. So it still has plenty of downside room before it invalidates the count. But I normally don't like to push it quite that far. Now, add to this that we had, let me get rid of that so I can look at this more cleanly. We had Apple report, we had Google report, and we had Microsoft report. All three made money. All three beat street estimates. But Microsoft is down approximately $9, $8-9 from where it closed, which is already down $2.50 on the day. So that the market is not fully embracing as a positive, even though they made 61, no, that was Google. They made a boatload of money in the second quarter. And we had Google, and Google actually finished the regular session down almost $57. It had been down quite a bit more, and then it rallied back. The earnings came out. Google made $61.1 billion in the second quarter. Their per share earnings were record. They over $28, so just over $28 versus I believe 19, which was expected. So they blew the doors off of that. That sent the stock back above 2,800 and actually to, I believe, new highs. 2813 or 14, I think it got as high, and then they started to bring it back down. So it's still up from where it closed, but it gave us a nice bounce in the index, and then it kind of sloughed off. Then we had Apple. Apple beat expectations in terms of per share. They earned $1.30 per share versus $1 expected. Right now, they're still in their conference call. So the stock, which I have highlighted right there, is kind of bebopping around, not doing a whole lot, but it's up from where it closed on the day on our regular session. So it was down $2.22, and right now it's up about 50 cents off of that. So again, not these earnings. Overall, Google got the best reception, but it's already back down towards where it closed during our regular session. So how do we want to interpret that? I have to interpret it the way what the market is doing. So this really does present us with me telling you what the alternate is and how that high at 15,134 could have been all she wrote. Saving grace. Tomorrow we have Amazon. Tomorrow we have Facebook. So we still have two titans left to report. Could they save the whole advance? Maybe. What's the reality on that? Well, both of them went up substantially last week. Facebook went up $21 in one day. Google also was behind all that as well, but Facebook went up $21 last week. That's why it's sitting at such a high level, 367.81, and that's down 465 on the day. Now we're back at 371, 372. So they already got it up $5. So they've got this back to pretty much where it was prior. What's that going to do for our index? Well, it should support it and start to push it higher. But if we get any of the others kind of moving along with them, then yes, we definitely could rebuild this rally, pick up the speed, pick up the pace. Again, this is the hourly, and you can see the hourly is pretty negative. If you want to see negative, let me just, for an instance, just put it out on the daily chart. And this came very, very close. See, it did not close on the lows. It closed up off of those lows, more than 100 points off of those lows. That saved the day. And the reason is that this was putting in a very negative bar. And had it reached its 20, it would be extremely negative. But or even just breaking below the 8 put a negative spin on it. And right now it's sitting right above it. That keeps the rally alive. Because if the daily bar, remember we were talking about this yesterday, that you always kind of like when you start to get sketchy about, gee, are we really going to start heading lower? You move out and take a look at your hourly and then your daily. And it was the daily that told us early on, when it started breaking below 14,900, to get out of the way because it was going to go. So that made it easier when you were back down trading on your lower term, even on the hourly. When it broke, would have been right there. You got, not that you would have played this any differently, but it just opened the door for the NASDAQ to drop past moving averages. The daily started it, and they came in and it dropped 100 points pretty dang quick. Boom, 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 boom. And in fact, it dropped below 14,800. It got all the way down to, come on, show me, 14,774. And that, believe it or not, that was support. So it came down, held that support level, and then rallied back up over the $100. So, so far, we've gotten almost $200 off that low, but that was due to earnings. Now, if they don't follow through and just continue to buy the stocks higher, like right now, Apple is now below the close. Not by much, but it's below the close after being up over $2 above the close. So we've got to let this all settle out. So what does that mean? My alternate right now is that this is 1, 2, that's 3, that's 4, and this is 5. And then I put a minor 5 above it. And then I put an intermediate 5 above that. And then I put a primary 5 above that. That's what we're staring at. Now, what that portends is this is 1, 2, 3, 4, 5 for the first wave down in our large correction. I'm going to quickly, I know I don't want to make this long, but these are important updates now. If I go out here, we are completing, I need to go out to the weekly, sorry about that. We are completing a primary 5, which then takes us to a cycle 3. We are getting ready to complete, or possibly have already completed, a intermediate 5. Well, let's just start from the bottom. A minor wave 5, an intermediate wave 5, a primary wave 5, and a cycle 3rd wave. That cycle 3rd wave has been in force since 2009. For 12 years, we now are going to correct. if indeed that high that we had yesterday is the high that holds. And if that's the case, this is the absolute first, if we manage to put another low in, so the market has to go along with us, that this would be the 5, 1, 2, 3, 4, 5. Right now it's an ABC. Right now it's A, B, C. So if they can pick up the rally, they want to keep it going, now's the time. They need to come in. A break below this spells more negative. In terms of, I don't want to use that word negative, because necessarily just because it's correction does not mean it's negative. It just means it'll be negative numbers. So in other words, we go down and everybody looks at that as bad. And it's not, because we can make a ton of money if we understand the move that's in progress and we trade properly, because we just reverse all of that strategy for on the way up, but we're using the same strategy, but now it's just going to be on the way down. So we will work out Fibonacci. We will put up, or I will be putting up what's going on and where it should go. And I'll pull it all the way out to this weekly chart so that I have to pull it out to our monthly maximum chart, because I'll tell you, the first one's going to be what? I'm going to have to take it from the bottom of cycle 2 to the top of cycle 3, which has not been put in place yet. But if it's going to be up here at the 15,000 right there, you're going to start to get some pretty big numbers. Initially, this is where I'm still looking for it to come. Now, that would be whether that's the completion point, 15,134 or 15,700. No matter which one is that finishing point, this is the initial area that I'm looking for this correction to come into. And it's going to form an A, B, and a C. It has to be 3. It can be a combination of 3, but it's going to be a 3-wave. 3 waves of primary degree to fill a cycle 4. So within that cycle 4, 3 waves of primary degree, a primary A, a primary B, and a primary C. What can that A wave take the shape of? It can be a 5-wave structure down, but that would mean wave 1, 3, and 5 are also going to be 5-wave structures. So it could be a pretty big slide. It could be a very big slide. It could take us back down below 10,000 before it decides to rally in the B wave. So we're looking at something pretty big right now. So that's why I'm going to start emphasizing things now. Yes, we still have the possibility where we might just turn and save the whole thing and head higher. If not, then that early start today was well-founded. We may find out more information tomorrow, because don't forget, Wednesday, we do have Facebook and Amazon reporting, but we also have the Fed. Maybe the Fed's going to come out and say, you know what, we really need to taper now. We really need to start reeling this in. You know, maybe they waited. They're having a meeting is coinciding with when these earnings reports will come out. And if they start reeling it in, if they start coming out and giving something other than what the world wants to hear, that we are going to keep rates low forever and ever and ever, cheap money is for real, blah, 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 because they're killing the dollar right off the bat, not going to hold it. The bonds, they're reacting because they're expecting maybe we get a little bit more. They're going to hold these rates. But now, if the market really starts to tank, there's going to be a mad influx to get back into the bonds. The idea of safety in the US debt. Okay, whatever you want to say. But my problem is that I need to be able to see that this is truly going to come up. And that is on the hourly chart. I have to see a stronger rally than what we got. This so far is still a 4. So in other words, 1, 2, 3, 4. And I'm going to just knock this down to the 30-minute and open that up a little bit. And now we take a look inside. We could have 1, 2. Now we're coming off. This could be a 1, 2, and then 3, 4. Okay. We already got a little bit going to the downside here. So we could be well on the way. And again, Asia needs to come in. And if their markets are not still going to sink, that's going to drive us lower, maybe even accelerate it. Don't forget, we're into positions now where it's like this thing can begin to accelerate lower. So far today, it does fit that top is in, because that level, let's see when it made that high, got up to 30. It did 34 yesterday on that yesterday morning, at noon. It made the all-time high thus far, 15,134. Started to reject yesterday, but we still had too much going on that I didn't think it would get too far. And it didn't overnight. They took it back up to 30, 31. Then they started to get crazy. Once the Asian markets started to open right there, boom, boom, boom. This is the Asian markets. No, this is today. Excuse me. Asian markets recovered some, obviously. But this was Europe. Then they brought it up. Then they started to bring it down. And we got a hold of it right there. And it just kind of dropped. And it dropped. That is clear. There's the open. So 1, 2, 3, 4, 5, 6. It just dropped for the 3.5 hours before we got a little bit of a rally back up. And that was into the close. That is the close. And then we started to head lower again. So this should be 1, 2, 3, 4. Now we got a 5. And that's just one of something. I'm going to say it would be one of a. I do not in any way, shape, or form think because of the entire size of the correction I'm looking for, that it would be the whole A wave. Could it be? Yes, but I'm not going to be looking for that right away. So what do we want to say for tomorrow? Proceed with caution. Again, it was a great trading day, even though we were down. So what I'm really going to encourage, as we're trading the beginning of something and the end of something else, you must trade what's in front of you. You must trade accordingly with your moving averages to guide you in and out of trades. You must be able to take a look at your hourly and your daily to see, are they confirming downside? Because if they start to confirm downside, then you just know how you're going to play it on your 1, 2, and 5 minute charts. They're going to tell you when we're going to get a little bounces, and some of those bounces are very worthy of trading to the long side. And but you're going to have an idea that the majority of the trade likely is going to be to the downside. If you're getting the confirmation from your hourly and daily chart, you get the confirmation on the weekly, that tells you we're in a much steeper correction. Okay, that's how it all works. One helps the other. Remember, these are building blocks. And if the building blocks go all the way out to the maximum monthly chart that we have, well, those building blocks build from the very small charts that we use. So use them the same way. They're going to build on each other to the downside now. If indeed this changes and ends up being 5 of 5 of 5 of 5 of 3. That's a big downturn. Getting past this little minor 4 would be a breeze. So yes, at some point I'm expecting bailout. In other words, we're bailing. People are closing positions. People are changing positions. A lot of things are going to start to happen, and they're going to affect how we trade that future. Also with the S&P. So pick your market. Both are going to do the same thing. There'll be no fooling around when it's time to get out, because the realization that we have reached the top will begin to filter out. Again, maybe not so much tomorrow, but I'm kind of beginning to feel that that's not going to be the case. I'm believing that we're likely going to start to tumble again tomorrow, at least putting in this initial five waves down. And again, I got to keep the count the same, because it has to break to make it, in other words, it's like there's no turning back. Right now, yes, it can come down, but until it breaks there, I don't consider, I can't consider minor 5 complete because it's not violating any rules. The downturn is not violating any rules, even though my guts tell me that. I'm pretty sure that we're done. I will wait for the market to tell me, but that doesn't mean I'm going to trade that way either, because I trade what's in front of me. And that's my main point. We need to continue to trade what's in front of us. So for tomorrow, I'm thinking that we again, I'm going to put that back up so we can see it. I'll put it right there. Put it right there. Come on. Thank you. They're a little bit different, but here we have 618, 14,750. Then we have 70.5 at 14,696, so about 14,700. Below that, you can see, boom, it widens. It widens greatly because it just falls to its starting point. And this, I'm not coming down here. And again, follow your Elliott. 1, 2, 3, 4. We get 5 and it's down to here, or 5 down to here. You're going to get a rally. That's the nature of the game. The ebb and flow will work no matter what level. So if we're getting that 5 down on the hourly, by the time you get down to the 5, you got a lot of rally in front of you. So see what I'm saying? When we follow what we're doing, in other words, the market will continue to ebb and flow, and you're trading it on I don't know, but I'm trading it on a 1, a 2, and a 5-minute basis. That's going to produce a lot of buys and sells in and of itself. So knowing what level of a rally can I expect from here? Is it a rally of $5? Is it a rally of $10? Is it a rally of $20? Depending on how far it goes down, you can run Fibonacci's real quick from the low to the high to figure out where it's going to go. How high should it get? And then you're prepared for your next round. Okay, so right now it's looking like we're going to come down. And so if we come in tomorrow and we're down at these levels and you can count 5 down on your hourly, then we're likely going to get a bounce. And it's maybe just going to be, and it should be a 3-wave bounce. It should be an A, a B, and a C. A up, B down, C up. And then you get that, your next leg down is going to begin. We'll figure out degrees after when we can sit and we can take a look at it together. But in the meantime, you must trade with what's in front of you. So be smart. Work with stops. Don't get caught up in that the market has to go in a particular direction. It will choose and let you know. Then we just play along. We're a very, very minute, small player in a very big body of water that is getting very active. The storm is swirling at the moment. And now they're going to hold out hope that the Fed's going to rescue it, let us keep going up, or Amazon and Facebook in combination with the Fed are going to rescue this. We'll know more tomorrow. We definitely will know tomorrow. In the meantime, I'm looking for a continued downside right here and then a bounce. And so we'll see how that all goes. Again, I'm just going to put this out there, folks. In my trade room, this is what we talk about. We talk about what's going on. We update things as they're happening. And I'm able to give levels. I'm able to give, no, this is a larger decline. I looked out at the daily. I would look at the hourly. These are things that happen in the trade room. If you are looking for a place that's educational, that is personalized towards each individual trader and what they need, give my trade room a look. And you just can check it out. I'm offering summer promos for the month of August. Actually, they're in place right now. So until the end of August, there are great promotionals to come and try out the trade room, look at the trade room, and also for coaching. So I invite everyone to check them out and check me out. If you've been enjoying what I've been talking about and you've been feeling that it's been fairly accurate, come learn how I do it. Anyway, I'm going to leave it all there. Good luck trading tomorrow. Have a great day. The next update will be Wednesday, the 28th.